Hello again, fellow BeachBum traders. Thank you for joining us for our initial due diligence video on Markforged, ticker symbol 8MKFG, where we'll do our standard initial due diligence and try to answer the question, is MKFG Markforged a stock to buy now? So again, we'll go through our due diligence, we'll look at the company, do our analysis on the stock, the company, etc., and draw our conclusions as to is MKFG Markforged a stock to buy now. So stick around to the end of the video and you'll hear our conclusions based on our due diligence throughout this video as to is MKFG Markforged a stock to buy now. So let's get started. Okay, let's take a quick tour of Markforged's homepage. I will put the direct link to Markforged's homepage in the description box below. We can kind of see what they're highlighting: bigger, faster, stronger. They're a smart additive manufacturing platform, also known as 3D printing. We can see they have a number of 3D printers. Looks like they have metal 3D printers, composite 3D printers, and some desktop 3D printers. Looks like the materials that they can use for 3D printing is metal, stainless steel, copper. Copper's kind of interesting. That's kind of unique. Plastics, that's pretty common. PLA, nylon, that's kind of interesting. Carbon fiber, again, interesting. That seems a little bit unique, a form of Kevlar, and also fiberglass. So they've got, it looks like some unique materials, so that's kind of interesting. They have some software, I'm sure, for using, designing, producing their products with their 3D printers. Industries are covering: aerospace, automotive, consumer product, educational, electronics. That's kind of interesting. Energy, federal and defense, industrial equipment, medical, and product development. And they've got some resources and standard information about the company. You can find their investor relations link. So again, I'll leave this direct link in the description box below. You can investigate their page and those details at your leisure. So go from design to industrial parts at the touch of a print. Digital form platform. A smart platform makes solves manufacturing products. So they've got industrial 3D printers, precision machines, performance materials, continuous fiber composites. Again, that's kind of interesting. And enterprise software dovetails into your workflow. So they're highlighting turnkey simplicity, robust parts, repeatable production quality parts, perpetual ROI, unlocked potential, transform your supply chain. So again, 3D printing is a way to solve a lot of supply chain issues. So that's good that they're highlighting that. They've got simulation software. Looks like they recently acquired Digital Metal. So they're saying Markforged to expand into mass production of end-use metal parts through Digital Metal acquisition. And here's some of their partners: Toyota, US VA, US Department of Defense, Disney, Purdue, Raytheon. So they've, NASA. So they've got some large-scale partners, and then you can try things out, request a demo, etc. So there's their printers, their software, their various materials. Got a long list of materials, some resources, and information. And it looks like they've got a decent social media presence as well. So hopefully that all helps. Quick tour of Markforged's homepage. And again, I'll leave the direct link in the description box below. You can investigate their homepage in more detail at your leisure. So I hope that helps. Okay, let's do our due diligence on Markforged Holding Corp, ticker symbol MKFG in ChartMill, and I'll leave the direct link to the profile for Markforged in ChartMill in the description box below. We can see a quick overview of their ratings as of November 20th, 2022. They're getting a technical analysis rating of 0, a setup rating of 0.5 out of 5, so very poor technical setup right now. We see a quick overview of their chart. Looks like it had broken up above its moving average, broke down below, is getting resistance. It looks like there's a downward trending line which is now presenting resistance, and we see it's in a pretty steep decline recently. We see it's got a fundamental analysis rating of 1.5 out of 5, valuation 1 out of 5, profitability of 0, growth of 3.5 out of 5, health of 2.5 out of 5. Looks like it does not pay a dividend. Last earnings was November 9th. It's got 10% insider ownership, a market cap of 269, 270 million, a PE NA, which tells me they're not profitable. They don't pay a dividend. Again, earnings, institutional ownership is 73%, 194 million shares outstanding. We see a profile for Markforged. Markforged Holding Corp. engages in manufacturing, producing, and selling 3D printers and materials to customers. They're headquartered in Watertown, Massachusetts. They have 374 employees, so pretty small in terms of employees. They IPO'd in August of 2020. Their platform's called the Digital Forge, intuitive additive manufacturing platform powering engineers, designers, and manufacturing professionals globally. Combines 3D printers and metal and composite proprietary materials with cloud-based learning software, offering manufacturers to create supply chains. Portfolio of 3D printers includes desktop printers that produce parts in settings where space is limited, industrial composite printers, predictable functionality through their software, sensors, materials, and print modes, metal printers that can fabricate strong, complex metal parts in a variety of advanced metals, various industries, including automotive, aerospace, energy, education, and medical. So again, that gives us a quick overview of Markforged, and again, I'll leave the direct link to their overall profile and ChartMill in the description box below. Okay, let's look at the stock chart in more detail for Markforged, ticker symbol MKFG, and ChartMill. So if we look at the daily chart, again, we could see it at one point it broke above its 50-day moving average back between July and August. Peak looks like there's a pretty strong resistance around 320, 315, etc. Then it went in a decline, broke down below its 50-day moving average. It looks like that trend line is providing pretty stiff resistance as well as the 50-day moving average. And then we see it's been in steep decline until from that until recently. Looks like it broke down previous lows. So let's zoom out to the weekly. So in the weekly, we can see it's been in decline for quite some time. Again, we see that declining trend line seems to be providing significant resistance. We can see it's getting rejected off of that upper trend line several times in the past. And then again, we see it broke down, making new lows very recently. We can go out to the monthly. And again, so we see that steep decline. And then it looks like it consolidated and then recently broke down. So again, the technical analysis data doesn't look good, but we'll look at that in more detail next. Okay, let's look at the technical analysis data for Markforged, ticker symbol MKFG, and ChartMill in more detail. We see overall, as of November 20, 2022, it's getting a technical rating of 0 out of 10. Score is bad on all fronts, bad performance in the overall market, and both the medium and short term are negative. Again, we can see that downward trend in both the weekly and the daily snippet of the charts. It's yearly performance, bad performance in the overall market, part of machinery industry. It's underperforming in the industry. It's underperforming and it's near its 52-week low. It's trading in a range from 139 to 226, which is quite wide, and prices have been falling strongly lately. It's better to avoid new long positions here. So we can see again the technical analysis ratings are very poor. The setup rating is 1 out of 10 right now. Says his technical rating is bad. Also does not present a quality setup. Price have been extended to the downside lately. For a nice entry, it is better to wait for consolidation. So we see a resistance at 188 to 190, then 194 from the trend line, and then again 199 to 203, and then 311 from a horizontal line. So again, stiff resistance, overhead resistance. We see it's been declining, both the near term and the longer term. So again, we see the technical analysis ratings are poor, 0 out of 5, 0.5 out of 5. We see the short-term and long-term trends are all negative. The ATR is about 16 cents. Volume is relatively low, 695,000 volume. Okay, let's look at the fundamental analysis data for Mark Forged in ChartMill. We can see as of November 20th, 2022, fundamental rating is 3 out of 10. It's in the machine industry, scored bad on very profitable. His financial health is fine, not spectacular, but in line with averages, valued quite expensively, but it does show an excellent growth. So you can see the strength for Mark Forge is definitely its growth. It would be considered, again, a growth stock. Valuation's pretty poor, 2 out of 10. Profitability is 0, so obviously they're not profitable currently. Health rating is 5, so average. We look in more detail. Profitability rating is 0. Negative profitability, they're not profitable. Return on assets is negative. Profit margin is negative. That's bad because that means they're losing money essentially on what they're selling. Petrovsky F is bad. A weak score indicates problems in health and profitability. So again, their profitability is very poor, and they're underperforming in the industry. So that's all pretty bad signs. Valuations 2 out of 10. Their price to book is okay. Negative earnings for the last year, which makes the PE ratio negative. So again, they're not profitable. They're losing money. But their price to book's outperforming the industry. So growth is their strong suit. Obviously, it's a 7 out of 10. Shows strong growth in earnings per share in the last year grew by 84%. Revenue's grown by 52% in the past year. Again, strong growth in revenue. So we can see this year their EPS and their revenue both grew nicely, but it's projected their EPS is projected to be negative going forward, and then not till years 3 to 5 does their earnings per share go positive. Revenue growth is steadily increasing until we get out to year 5. So again, we see their revenue is expected to continue to grow pretty steadily. Their EPS is very negative, and it's expected to recover around 2024, still not be positive, but then go into decline. So they're not projected to be profitable anytime soon, as per this data in ChartMill. So their health rating is 5 out of 10. Current ratio looks good. They're outperforming the industry in terms of their short-term obligations. Quick ratio is good, better than the industry. Their debt to equity is 0, so it sounds like they must not have any significant debt. But the Altman Z-score is low. That's bad. That indicates they're not financially healthy, so has some risk of bankruptcy. This could also indicate a potential risk of offerings. They're going to potentially need money because of that low Altman Z. That indicates, again, their financial health isn't very good. You'd have to be watching out for a potential offering. Petrovsky F we saw wasn't very good. So again, those are major red flags to me. So versus the industry, their debt to equity, quick ratios, so they're okay with their short-term obligations, but it looks like they might run out of cash at some point and have to do an offering or somehow raise additional cash. And again, in the current environment, where interest rates are high and going higher, additional debt or any kind of debt would be pretty costly. So again, an offering, risk of an offering seems potentially imminent. We'll see what their cash position is as we do our further due diligence. So we see their industrial, capital goods, machinery. Got good EPS growth, but their EPS even next year is expected to be negative. Good revenue growth. Health rating is showing average here, but the Altman Z is an issue and the Petrovsky F is an issue. Again, they're not profitable, so their return on assets is poor. Don't pay a dividend. And their enterprise value to EBITDA is negative. Again, they're not profitable. They're losing money. Market cap's about $270 million. Institutional ownership 10%, or insider 10%, institutional 73%. Okay, let's look at the analyst ratings for Markforged and ChartMill. We can see right now, as of November 20, 2022, it has a buy consensus rating of 82%. Says mean price target of 371, so 167% upside. It's only got 13 analysts. Consensus is 82, so it's a buy. We can see price targets on the low end is 263, still at 89% upside. Median 395, 184 upside. The mean 371, 167% upside, and the high is 420 for 202% upside. So, plenty of upside here. See, it's been neutral in terms of no changes to the ratings. Again, they have 13 analysts. This says it's quite many, but it's still relatively low. Up and downgrades. We see the most recent is just neutral. Some buys outperform. So currently we've got 4 strong buys, 8 buys, 3 holds, no sells. And we see the buys have been increasing. Hold, we had a little bit of a drop off in the buy and moved to a hold recently, but again, no sells. So the analysts like it. Okay, let's look at the ownership structure for Markforged and ChartMill. This is showing an institutional ownership of about 73%, insider ownership of about 10%, leaving 16% for public retail investors. So shares outstanding, 194 million. Shares float, 89 million. Again, that discrepancy is a little bit of a red flag to me because it shows the potential for an offering. I would want to know if they already have a shelf offering sitting out there that's in effect that they could drop at any time. But again, watch out for offerings due to that discrepancy between the shares outstanding and the float. We've got 10% insider, so that's a positive. 30 or 73% institutional, again positive due to stability. Insider change has been positive, so it looks like some insider buys and a slight increase in institutional ownership. So institutional ownership was going steadily up. A slight increase in September. Insider transactions showing other, just a little negative in November. So had a big sell November 13, open market sale. Okay, let's do our due diligence on Markforged Holdings, ticker symbol MKFG, in the stock screen and the online browser version of Webull. See, it comes up to a 1-year chart. We can see it had previously bottomed around 1 176 or so back in June, ran up a bit, ran up as high as about 324, then started choppy decline. Recently, it's been pretty steady decline, made new 52-week lows at about 139 or so, sitting kind of at a support level, but it seems like it's breaking down. They had earnings on the 9th. They reported 25 million in revenue. We look at a shorter term chart, 1 month chart. Again, we can see that steep decline over the past month. It's approaching this second level of support, but again, pretty steep decline recently. So we look at the news, see if there's anything. Okay, a price target cut, so that's negative, neutral, neutral. Say they reported a negative EPS, so they lost money, missed by 3 cents, so they missed expectations. Revenue of 25 million, missed by about $1 million. So again, they were not profitable in the latest quarter, and they missed estimates. So that kind of explains the steep decline over the past month. We look at their financials, income. It looks very choppy. It's been pretty close to expectations, but pretty choppy and negative. Their balance sheet, they've been beating expectations, but again, pretty flat. Cash flow is negative, so that's not good. It's expected to be 0 Q4 of 22. Financial ratios are pretty negative, and they're missing significantly. So their income statement, you see their net income, it was slightly positive previously and then went pretty dramatically negative in Q3 of 2022. So that's negative, and again explains the steep recent decline to some degree. The revenue increase, so that's positive. Looks like it bottomed in Q1, but it hasn't beaten their previous high in Q4 of 21. Operating income. So again, their operating income is pretty negative. It slightly improved, but again, pretty negative. They're losing a lot of money. Their balance sheet, so their total assets isn't changing very much. Their debt really isn't changing very much, and it's not very high. So their debt to asset ratio, although it has increased slightly, it's not very high. Their operating cash flow, again, is very negative, and this Q3 was the worst. So again, explains some of the recent declines. Again, their investing cash flow very negative in Q3, so they really lost a lot of money in Q3. Again, explains why they're breaking down to new lows. So, and again, their financing has dropped off quite a bit. So from the analysts, Webull only shows 7 analysts. They show consensus buy. We got 29% strong buy, 43% buy, 29% hold, no sells, no underperforms. We see currently the price is 139. The low is 170, so still some upsides. The average is 264, and the high is 350. So we have plenty of upside from its current price from the analyst's perspective. Press releases, just standard press releases, corporate actions. It doesn't pay a dividend. You can see insider activity. It's not showing anything, no splits, no dividends, etc. It is optionable, so if you did want to hold this for, an extended period of time, you could sell covered calls against that position, generate your own dividends since it does not pay a dividend, and again, kind of wait for it to turn around, wait for it to recover, which, may be a long time, but there is some way to sell covered calls to generate some dividend type income against your position. And then again, you can see the profile for the company, a link to their website in the brief tab underneath the chart in Webull. So again, the looks like it's in a pretty steep decline. It's approaching that support level. The most recent high was about 224, plenty of upside, but I don't see any indication that of a turnaround. It looks like, it's going to continue to break down at that point. It's below its previous 52-week low, making new 52-week lows. So, it looks like it's in pretty steady decline. It's broken down even below a long-term support level. So there really isn't anything, any lower support other than this, technical support level here that would give it any support. So I would expect it to continue to decline until it achieves some level of support. So you would want to see it achieve a support and stabilize and turn up before, from a technical standpoint, taking any kind of position in Markforged ticker symbol MKFG, at least from a swing trading standpoint. Just a quick reminder that as of the recording of this video on August 16th, Webull is currently offering up to 12 free stocks if you open and fund a new account in Webull. This is the most number of free stocks I've seen Webull offer. I don't know how long this offer will last, but if you're not already using Webull, here's an opportunity to get 12 free stocks. You can find our affiliate link to Webull in the description box below, on the About page on our YouTube channel, in the link section. Okay, let's do our due diligence on Markforged Holding Corporation, ticker symbol MKFG, and FinViz, and I'll leave the direct link to their profile in FinViz in the description box below. We can take a quick look at their chart. We see it's been in decline for pretty much all of 2022. We can see that downward sloping trend lines providing significant resistance. We can see we've got a horizontal resistance around 3. It recently broke down through this support level at about 175, so that 175 now would provide a resistance level. It's broke down below its moving averages. So if we zoom out a little bit to the weekly as well, again, we can see it's hugging its 20-week moving average, but it's significantly below its 50. We see that steep decline very recently, breaking down to new lows. Again, no appearance of support below that. And again, they've only been around for 2021 and 2022 in terms of IPO, and you see that pretty steep decline. Did have a period of consolidation, but now recently broke down. So again, from a technical analysis standpoint, it doesn't look very good at this time as of November 20th, 2022. We look at some of their metrics. They got a market cap of about 293, negative income, so they're currently not profitable, so that's a negative. So they lost 11 million on 98 million in sales. Cash looks pretty low. Debt, no, doesn't look like they have any debt. It is optionable, so you could write covered calls against your position to generate your own dividends, as it doesn't look like they pay a dividend. Shares outstanding 190 million, shares float 163 million, so there's a little bit of a discrepancy showing in FinViz, so potential risk of an offering shorts float's pretty small, so not any kind of short squeeze type thing. Target price here is showing at 264, so plenty of upside, pretty much almost a double from the current price, but performance has just been in steady decline. It's ATR is 16 cents, so not a huge range, not a lot of volatility. So if we look at some of the recent news, see if we see any green or red flags. So we get some red flags even when they're releasing some news, negative 9%. They're after their earnings on the November 9th, got a really negative reaction, negative 9%. So again, that explains in part, at least, the recent steady decline. So they acquired Digital Metal. That was a positively received. Their first quarter 22 results were positively received. They got a new CFO that was not positively received. We can see, their description here. Mark Borch Holding Corporation produce and sell 3D printers, materials, software, other related services worldwide. They offer desktop, industrial, metal 3D printers and composite, continuous fiber metal parts, advanced 3D printing software. Serves customers in aerospace, military, defense, industrial, automation, space exploration, healthcare, automotive. Was founded in 2013, headquartered in Watertown, Massachusetts. Look at some of their financial metrics. So it looks like their revenue has been increasing a little bit, cost increasing kind of in line, gross profit declined a little bit. That's a little negative. EPS was positive for a quarter, was negative, went positive, and then went negative again. So they're losing, recently lost a significant amount of money. Look at the quarterlies. Again, revenue slight increase. Costs are increasing though. Gross profits went up a little bit and then down a little bit. And their EPS again was positive and then went negative. So again, their latest quarter was not good, and again, that in part explains some of the recent decline. Okay, let's do our due diligence on Mark Porch Holding Corporation, ticker symbol MKFG, and Seeking Alpha. I'll leave the direct link to their profile for Mark Porch and Seeking Alpha in the description box below. See a quick overview of the chart. Looks like a little choppy, but generally in steady decline. Looks like it's very close to its 52-week. Well, it is at its 52-week low. We see the high was 750. Let's see, EPS forward is negative, so they're obviously losing money. PE is not applicable, so again, it shows us they're losing money. Short interest about 6%, so pretty small. Market cap of about 270 million and a volume about 694 or 695 million, so relatively low volume. Take a look at some of the analyst articles and news. So here's someone November 4th said a wonderful company at a fair price to drive significant growth, speculative de-SPAC. So it sounds like this was originally a SPAC. We see their latest EPS though was pretty negative. It was negative and they missed, so they lost money and they missed expectations. So that in part explains the recent decline. Doesn't look like they have a lot of analyst articles, so not a lot of coverage. Okay, so they also missed in where they lost money in August as well, but it was in line and they beat on revenue, maintained guidance, but again then came out in November and lost money again. So it looks like they were profitable back in May. And they acquired a material simulation firm back in April. So ratings from the Seeking Alpha authors have strong buy, Wall Street strong buy, quants sell. So that tells you the technical analysis ratings very poor. Valuation C minus, so it's not valued very well. Growth A plus, so obviously it's a growth stock. Profitability D minus, obviously they're losing a lot of money. So we look at their revenue, their annual revenue. Looks like it's growing, expected to continue to grow. Look at the quarterly, so a little bit of chop, Q4, and then they had a dip. Then they're expected to recover and go back up in Q4 of 22. But they're showing a decline into first quarter 23, so that's not very good. So EPS, again, negative, so they're losing money, and it doesn't look like they're expected to recover anytime soon, and there's no indication they're going to be profitable anytime soon. So again, from an annual standpoint, they're expected to lose a significant amount of money in 22 and continue to lose money in 23. So again, I don't see a road to profitability at this point. So again, earnings expected to be negative, but improving going into 24. PE is again still negative. Sales are expected to increase. So again, all the PE, they're just losing money. 10% growth in revenue. Gross profits 53%, so that's not too bad. Margins pretty bad. Net income margins pretty bad. Return on equity and assets is not good. Market cap about 270 million. Total debt, so here it's showing they have some debt, 48 million. They have 181 in cash. So we'll have to see what their burn rate is. They do have a little bit of cash. Enterprise value 136 million. So the trading volume about 695K. Shares outstanding 194K or 194 million. So ownership wise, got 32% institutional. We've got a PEVC firm, so if that was a SPAC, that may be the original SPAC owner, still owns 43%. So there's a potential, selling. If that PEVC firm sells out, we got hedge fund managers, got some insiders at about 4.6%, another corporation at 4%, and retail is again very small, only 7%. So most of this is held by institutions, maybe the original VC firm, and some hedge funds, etc. So short interest pretty small. Beta is positive and 1.4, so it's going to move faster than its average. Here it's showing an Altman Z-score of about 4.6, so here it's showing not too bad. It's trending down as we saw. Revenue 97 million. EBITDA, they're losing a lot of money. Negative 79 million. Net income negative 11 million. So again, they're losing a significant amount of money. They have some debt. Cash from operations negative 72 million. So unlevered free cash flow negative 46 million, and we saw they only have 181 million in cash. So all those tell me, they're losing a significant amount of money. They're probably at risk that they need to do some kind of financing, probably an offering within maybe the next year if they keep losing money at this rate. So again, red flag, they're losing money. They're at risk of potentially running out of cash. They're going to have to do some kind of financing in the current high interest rate environment with raising interest rates. Debt financing may be pretty expensive. So again, all those tell me that they probably are going to have to do an offering. So that's something to watch out for. You can look for SEC filings here in Seeking Alpha is one of the places you can look for SEC filings, and you can see if they have a shelf offering outstanding. I won't dig into that here, but there is a place here in Seeking Alpha you can look for offerings of effect notices, SEC filing effects, to see if they have shelf offering currently in effect that they could drop at any time. So again, red flag, potential risk of offering, be aware of that. So based on all of our due diligence here in this video, what is our conclusion as to is MKFG Markforged a stock to buy now? We saw it's been in steep decline. It's breaking down to new 52-week lows. We saw they're losing a significant amount of money, very potentially at risk of an offering. They may already have a shelf offering in place, but again, they're losing a significant amount of money at this point. And again, they may be at risk of having to do some kind of offering because debt financing with the raising interest rates may be pretty expensive, and at their rate of cash burn, they may run out of money in several quarters if their cash burn continues at this rate. So again, from a fundamental analysis standpoint, in a current recessionary, if we're in or going into a recession with rising interest rates, our conclusion would be, to the answer to the question, is MKFG Markforged a stock to buy now? We would say no. The current environment is not conducive for growth stocks. Markforged could be considered, a growth stock when the environment is more attractive in desiring the sentiment's positive for growth stocks. Markforged MKFG may be something to look at, but again, they're in steady decline. There's no sign of a support. They broke down through their support levels. So again, I would expect a continued decline at this point because there's really nothing to keep it from continuing to decline. The current stock market environment as of November 2022 is not conducive to growth stocks that are losing money. Now, just a speculation, given their position, and they may be a candidate for an acquisition from a larger 3D printer that's making money. We've been watching the 3D printer space for a long time. We've owned a number and own a number of 3D printing stocks. We like the technology in general. We've been through the waves of positive and negative sentiment cycles, etc., over the decade. And so we like this. Markforged has some interesting technologies in terms of some of the materials they do, and that is attractive. We'll keep an eye on Markforged in the long term to see if they find a road to profitability. I didn't see any road to profitability. They're losing a lot of money. They're going to run out of cash, and they're going to have to do something. An offering, again, a potential target for an acquisition from a larger, more profitable 3D printer, and there are some out there, so something you might keep an eye on as well. But again, our conclusions based on all of our due diligence in this video to answer the question, is MKFG Markforged a stock to buy now? We would say no. We're going to keep an eye on it for the long term, see if they do eventually achieve profitability. If so, then we would take a new look at Markforged and maybe consider it. And or if the stock market environment becomes more attractive for growth stocks again. But we don't see that happening anytime soon either. So again, none of this is financial advice. It's for education and entertainment purposes only. But we hope that this all helps you. And please let us know in the comments below in our free Discord. You can find an invite to our free Discord in the description box below. Let us know, what do you think? Is MKFG Markforged a stock to buy now? Why or why not? Short term, long term, etc. What do you think of MKFG Markforged? Let us know in the comments below, in our free Discord, in our Facebook group, via our social media profiles, etc. So we look forward to hearing your views on MKFG Markforged as well. So we hope this all helps. Good luck and have a great trading day. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U. and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.